guys hear me? I think the audience does.
Yeah, you there?
Yeah, I'm here.
All right.
Apologies for being late. I just had to wrap up a few things in my room, and we had a guest speaker, so I was just passing over the baton to someone else to help mitigate that chat.
All right, cool. Who's your guest speaker?
I have a former Wall Street executive in my room, and he works for a hedge fund.
Oh,
So he comes and
nice.
speaks about once a month, and he comments on what's happening in the market and gives his take on things and what he is, looking to focus on for his own personal trades, and gives us a different outlook on what's going on. So yeah, it was good. It was a great conversation they're having. So
What was his overall perspective? If you can summarize it in
he didn't
two
really.
lines for
I
us.
had to leave, so he just came on. So I can't. I guess I'll have to get caught up. But some of the questions they were asking was, people wanted to know his thoughts on the shipping and the oil rigs, and his thoughts on oil. But I'm not able to hear it right now because I'm not there. So I'll have to.
Right.
I will have to get an update.
Okay. All right. Well, trying to get Igal here. He's busy listening to a conference call on SMSI, which is an interesting one. Did you know Code Red? Is Code Red a buddy of yours?
No, it was Code Red.
Oh, no, I when he came in, I heard he said Code Red.
Oh, I thought you were saying like Code Red.
I added him as a speaker.
That's so funny. I thought you said Code. I thought you said Code Red, like that you're looking for us. Like that it's an emergency. You're trying to find us. I'm like, I'm on my way. So I thought you were like Code Red, like Code Red emergency. So yeah, I guess Igal will be joining, or he's around.
His listening to a conference call, which yeah, we'll see. It's
that's okay.
One of these story trading stocks, Smith Micro, SMSI. You probably don't know about it. I don't know. But it's like a $200 million company. I held it for a long time, for years.
Smith Micro? SMSI? Yeah, I know that company. I have traded it in the past. It's been many years.
Oh, yeah? Really? Wow. So yeah, I was in that at $2 and I held it for a couple years. I think it went all the way to like $6 or $7, and now it's a little under $4. But I was shedding that since early November when RK started selling off. I started selling my risk assets, and I considered that one of my risk assets. And then I finished completely selling it off after the Ukraine war started a couple weeks ago. Consumer discretionary. That's how I look at it. I don't want to be in consumer discretionary stocks. I'm going to talk to you soon about Apple. Oh, I didn't put Apple in the title. I'm going to do that now.
Well, that's good because I'd like to talk to you about Apple.
Oh, it's going to be fun. All right. Hold on. Here, let's add Apple over here. AAPL.
Hi, Nathan. I see Nathan there. Hi, Nathan. Jake. Jake's here too. Hi, Jake.
All right, so let's get started. We don't have a big crew, but hopefully people will trickle in, and we'll get this on Spotify as well.
Yeah, that's okay. People have schedules and have things to do, and so you can listen to it, listen to the recording whenever they have time.
Okay, great. So before we get into any specific stocks, I just want to get your big picture perspective on what's going on from a macro perspective. Obviously, we have the war, but also we have CPI numbers this morning, and we have the Fed decision. Is it just a meet? They're going to actually raise interest rates possibly next week. So if you can give us your big picture perspective on markets and maybe SPY, QQQ as it relates to all of those topics, let's get started there.
Well, we saw that the futures did tick lower after peace talks, had failed to make progress, and on trying to negotiate a ceasefire, and we saw some declines in the stocks after a losing streak in previous sessions, and It's kind of like the best session actually in 2 years. Investors kind of looking optimistic towards obviously de-escalation of this Russia war Ukraine situation. And right now we could see the I think Russia's foreign minister Sergei Lavrov, he had a meeting in Turkey today with his Ukraine counterpart Dmytro Kuleba, and the officials mentioned that they apparently failed to make progress on any negotiations of a ceasefire. So we did see energy stocks soaring to 14-year highs this week. And if you noticed, XLE in particular was actually doing really well too. It was pretty strong. So that could have been as a result of the energy prices soaring to 14-year highs. Following the reports, it had soared also following reports that Ukrainian President Zelensky was open to discussing a diplomatic solution with Russia. And then we saw crude oil plunging to around 110 a barrel, and then Brent crude fell to nearly $112 a barrel. And even as oil prices abated, you could see U.S. gas prices notched a fresh high. I gotta say, these prices at the pump are really bad, horrible inflation. I think equity markets have a bid today as the markets are clinging to the slightest glimmer of hope of a possible forward step for de-escalation. And as traders, retail traders, or those fat cats, they're obviously monitoring geopolitical conditions, and I guess monitoring it as best as they can, and then I guess reacting accordingly. So I will say it's day to day in some cases. I'm really not going long on a lot of stuff. I am going long on things that I have, you know, my own story of why I like it. So I'm comfortable. I don't care about the volatility with some of these because I have like the vision of where I think it's going to go and the story. Um, so I don't really have much more to say about that. I know that obviously inflation did set fresh 40-year highs, and CPI rises 7.9% over last year. So it's not looking nice in the pocketbooks of consumers. I think the inflation data is continued confirmation that inflation is not transitory and has not peaked. And so I think that I think, one of the comments that was made by Robert Shen, who's a chief investment officer at Blank Shine Wealth Management, said that, and I'm going to quote what he said, that, we believe that there will be an even stronger inflation reports over the coming months, which does suggest that the Federal Reserve will need to accelerate its rate hike plans, even with the renewed uncertainty that has emerged from the crisis in Russia, Ukraine. And then we know that Biden also made a statement today pointing to Russia's war Ukraine as a main contributor to the jump in prices. And I gotta tell you, I can't really say that I agree with what he's saying. We have to. Inflation's been happening before the Russia Ukraine, anyways. So I don't know what he's talking about. He's trying to make it seem that the reason that a large contributing factor to inflation was the increase in gas and energy prices, reacting to Putin's aggressive actions, and maybe that's a part of it. But putting that aside, I mean, honestly, the price of food, the price of gas has been going up like before all this happened. So it's not like all of a sudden everything was, great and everyone was happy to pay the prices you're paying. People were comfortable with the price of gas. I mean, it's just like really very poor leadership. So I can, it's to blame. I mean, to put blame there, I don't think, you know, not a good statement in my opinion, to make it seem that that's really the reason, and that's a contributing factor to it going higher. But it's not the reason that it was already going up. It was already going in the wrong way, and not helpful to consumers. So anyhow, that's my rant about that. But we'll have to see what happens. I think there's a lot of, the buying power of Americans and people across the world is being squeezed more and more each day. And I think that the reality is reflecting in the consumer sentiment reading. And so I guess it's unfortunate, but what are we going to do? People are not maybe traveling as much. People aren't going to drive as much. People are going to put maybe certain things on hold, maybe road trips. I heard, some people were saying they're not going to go on road trips right now because it's just costing too much money. They're putting their plans on hold until price of fuel comes down. So, people sometimes prefer road trips versus flying, but even that's getting expensive. So I don't know. And I'm interesting because I'm seeing a lot of travel stocks. Some of the travel stocks were popping today too, and even yesterday. And I was like, wow, I thought those would be taking a much bigger hit, but it seems the travel stocks look to me some strength in the travel stocks. Like American Airlines was strong, CCL was strong. Those were looking pretty strong at one point today. CCL in particular had a lot of volume coming in. So I wouldn't be surprised to see that some of those stocks could be potentially under accumulation. I see a lot of volume in CCL in particular for like April 2022 and January 2023. So we'll see. I guess sit back and just take it one day at a time and trade what I can and make money with what I'm seeing and not go into swings that I'm not comfortable taking. I think that's the bottom line. Everyone wants, a lot of people may be hesitant to swing anything, and that's okay. They're not comfortable, but I'm comfortable with the ones I'm in, and so I will take them. And just, a lot of this to me could be noise. So I try to cut the noise and just focus on the story and why I'm liking certain setups.
Well, that's very interesting. So you're saying you have some empirical data or evidence that people are delaying some travel because of high gas expenses. You've heard that personally from people or on Twitter. Where do you hear
Yeah,
that?
I have a few friends of mine that were going to go on some road trips, like even people from my room that were planning to go on road trips with their family. And they're like, you know what? We're going to hold off right now because it's just costing too much money for the fuel. So, I guess they're going to put their
Well,
plans are on hold until maybe they feel more comfortable spending the money.
that's an awesome data point. I really like looking at data like that because seeing what's going on around you in your community with your friends and family, that's often a leading indicator. You'll see that before it comes out in any kind of official reports. So that's one of the reasons I started getting into gold a few months ago because I just saw everybody talking about inflation. I guess it was like maybe starting in September or late summer. All anyone would talk about was inflation. Regular everyday people usually don't talk about finance, and that started opening my eyes to gold at the time and helped me make that decision and get in before a lot of other people did. So let me ask you: Are you still, or are you talk about CCL a lot? That's the Carnival Cruise Lines. Is
Hmm.
that something you've been holding as a long term holding? And if it
Yeah, I
is,
love
you're
it.
still you still love it. So why would you
Hmm.
still love it in this kind of situation where you're seeing people are canceling travel plans?
Well, I'm talking about people that I know, but I will say the cruise lines, they're being booked. Like people are booking, like people are ready to go, and I think that the actual stock. I mean, there is caution. Like you have to be cautious if you're looking to trade or invest in CCL because it's not a smooth sail. So it's not going to be smooth sailing in terms of having this particular stock. I think it's made it difficult, with the COVID for people to be comfortable, and it has weighed on Carnival's top and bottom lines. It's been very frustrating for CCL stockholders who are, hoping for a rebound. And, that's what I'm going to be looking for longer term. We're looking for the signs of having a less restrictive environment for cruises, which is going to be very encouraging. I wouldn't say, I mean, in my opinion, I mean, I have been building the position and certainly waiting for more confirmation from the company's financial position to improve dramatically before I will add more. And, some people that are eyeing the stock are not in the stock, and they're probably going to be waiting before they get on board this actual shipping stock. Remember that the long term target longer term, I don't think it's unreasonable to see the stock in the high 40s or low 50s. And if you ask me like how long will it take to get there, I'm interested in investing. You know what? It's going to take a lot. I think it's I can't give you exact timeline. It's really this COVID situation. This is one of the stocks, in my opinion, that has not had the COVID comeback the way that, let's say, other stocks, like, remember Boeing was down below $100. That's made a nice comeback. Still not up to where it has been in the past, but certainly made a huge comeback. CCL is just one of those stocks that just hasn't had the run that it should. And so it's going to take time for the stock to make a comeback. And I think this is a good one for someone that has a long-term horizon, and to keep the position size small. To build confidence in the stock and to build, to kind of monitor it. But if you are someone that likes to invest, but you don't, you're looking for something short term, personally, this would not be a stock that you would consider, because, like I said, this is someone that has a long-term horizon. This could take like a year to 18 months, maybe 2 years. The only thing that I will say that's been encouraging with CCL is obviously, they have a thing called, and I've mentioned this before, their Book with Confidence program that they started in January of this year, where if you book with Carnival, you can cancel as long as you cancel 30 days before. You will receive cancellation fees for a future credit, and then you can rebook your trip when the time is right. So you're not going to necessarily get the refund unless you have maybe cancellation insurance, that has obviously terms and conditions that qualify for the refund. But at least, if you book and you have to cancel your cruise, you'll get at least a credit that you can use for a future trip. But the other thing too is they also announced, as of March 1st, which is a new piece of information from when we talked last about CCL, is that they are no longer requiring you to have a mask on board. So masks on board, although they're recommending, they're not required starting March 1st. So honestly, someone like me, I've never been on a cruise my whole life. And so I used to be in the travel world from the insurance side, but and I've heard phenomenal things about cruises. I'd love to go on one this year on Royal Caribbean, and I'm looking at one.
Nice.
But I will say that I would never go on a cruise if I had to wear a mask. So, I mean, how can you enjoy a vacation that the weather's nice, you're lying on the ship, you're relaxing, you're outside, and you got to wear a mask the whole time? Like, that's not a vacation for me. So I like the fact that that you don't have to wear the mask. They are going to continue to meet the standard of vaccinated cruises. Obviously, children under 5 don't require that, and that they did say that they are going to resume the entire fleet operation of Costa Cruises, which is under Carnival's brand. They're going to resume the operation this year, and that is huge news for Carnival because Costa Cruises actually has over 1,800 cruises that they have from spring 2022 to winter 2023. So these are all really good signs that the company, is going to start getting all those ships back in the water, which means that bookings are happening and people want to travel. But it's not to say that the stock's out of the wood. There's been so much technical damage to the stock, that it's definitely very risky. Definitely something to watch for someone that has an appetite for long term, or just to monitor the stock. And when you start to feel comfortable, maybe it would be something you'd consider. But this is definitely for someone who has a long-term time horizon. And the thing is, you have to be patient with something like this. You cannot expect quick returns. You can't, let's say, if you were thinking to buy CCL, you can't buy it and expect, okay, in 6 months I'm going to make big money or I'm going to make good money. It's not that kind of stock. It's going to take a lot of time. So this is not, this is only good for someone that has a long-term horizon, a couple years. So that's, my opinion. It's going to take a couple years.
Great, thank you. Sounds good. You're gonna enjoy that cruise, by the way. I've been on a few of them. They're great. I want to throw
Yeah.
you. I want to throw you a curveball. We got Rocket Man listening here, and we see in our story
Who's
trading
Rocket
community.
Man? Who's Rocket Man?
Well, in our story trading community, we're talking about North Korea.
Mm-hmm.
Just launched
Oh,
or just
Rocket Man.
tested. just tested some sort of doing some missile launches, and now I'm seeing
Mm-hmm.
some chatter in our community about some
Mm-hmm.
sanctions against North Korea. So I wanted to, I don't know if you've looked at the defense sector. I did a whole bunch of homework last night in terms of missile
Mm-hmm.
defense stocks, and I'm curious if you're familiar with Raytheon RTX or the other one, Lockheed Martin LMT. Have you looked at those?
Well, I'm not in them. I'm familiar with Raytheon and Lockheed Martin. Some members in my room are in Lockheed Martin because actually, I know they're in that one for sure. Lockheed Martin. Some of the traders are in that one. I mean the chart's great on Lockheed Martin. Um, it's a obviously defense stock, but very nice weekly chart. I mean, from a swing perspective, I obviously don't have a position in that at all. And that's not kind of like my kind of stock that I like to buy. But I will say this, defense stocks are really safe for dividends. And we know that the aerospace sector, I mean, the defense companies are very good, and especially when there's heightened uncertainty, right? And so we know that this one here, Lockheed Martin's very nice, the one you've presented to me. I don't know if you're familiar with this one called GD, General Dynamics, and there's another one called NOC, which is Northrop Grumman. And so those three in particular that I just mentioned, those are defense stocks with market beating yields and safe dividends. So those are some, kind of the top three names to consider for safe dividend stocks. General Dynamics is the fourth largest company, first of all, in the industry and the defense sector, and the $65 billion company generates annual revenue of $38.5 billion. And they have like four segments. They have aerospace, combat systems, marine systems, technology systems. So, they have a lot of products. They have the M1 Abrams tank, the Stryker vehicles. They got the Virginia class submarines, and so they have a lot of offerings to their clients. And aside from just defense products, they also have the Gulfstream business, Jetline, which diversifies their business model. So this is really a good one. They did have a recent announcement, an increase of 5.9% of their dividend growth streak of 31 years. So that is incredible to have that. It is the longest amongst the aerospace and defense companies. So this is a growth streak that qualifies as, in my opinion, what they call a dividend aristocrat. So I don't know if you've heard of this one. Have you heard of General Dynamics before?
Yeah, well, I've seen it I had a defense ETF that I picked up when the war started. I think it was
Mm-hmm.
PPA, I think it was.
Mm-hmm.
And I saw the holdings, and that was in there. General Dynamics, along with all the ones you mentioned, Northrop Grumman, they were all in there.
Yeah.
So that's all good. I'm particularly interested in missile defense because of the threat of Russia. That was like some sort of red line, I think, when they raised their nuclear threat. So I'm really thinking that you could see massive increase in government spending worldwide on installing all these anti-missile defense systems. So yeah, I did quite a bit of research last night, and I discovered that Lockheed Martin LMT and Raytheon RTX are the two
Mm-hmm.
main developers and beneficiaries of missile defense systems. So I actually rotated out of the ETF because I wasn't getting enough pure play exposure to that, and I put a half into Raytheon and half into Lockheed Martin. I just did that this morning, and now we see in after hours that Rocket Man in North Korea has tested a missile, so
Is he
maybe we'll get
really?
a
Rocket
little
Man
push.
needs to have a little chat with Trump. He always kept him in line there. But yeah, that was a cute name, Rocket Man. First, I thought you meant like Rocket Man was in like the uh in our little chat here on Spaces. I'm like, who's Rocket Man? Like, was there someone here called Rocket Man? So, back just to wrap up LMT, because I know you brought it up. So I just want to mention too that, obviously that one in particular, I mean, they are the world's leading defense contractor, and they have leveraged their leadership position in aerospace and defense, and they've increased their dividend for 20 years. And this one here, I mean, their expected payout ratio for 2022 is around. I think they have a yield of 2.5%. And I think they have a really strong dividend. And so anyone that invests in this one, they're very safe and have a great dividend payout. So, I mean, that's a good one too if you like long term. But yeah,
Well,
that's a great pick, LMT.
yeah, you never fail to impress me. I knew when I threw that curveball to you, you could handle it. Unbelievable knowledge right off the top of your head. So that's great. So I wanted to circle back to the economy, SPY, QQQ. So we talked about rising oil costs and maybe hampering travel. We have the Fed decision next week. So
Mm-hmm.
how do you see all of this impacting the major indices? And I'm curious what your outlook is on the possibility of recession as well because of all that.
It's hard to say. I mean, I think that there's a lot of obviously geopolitical tensions and the market's faced with a lot of headwind. And obviously, they're going to be stocks that are going to outperform as compared to others. Just give me 1 second. I just got to close my door. Hold on.
Sure, no problem.
One sec.
Hey guys, while we're waiting for Vegas, if you're enjoying this chat, go ahead and hit that plus in the bottom right. Let your colleagues on social media know about this chat. Really good content here. All right.
Yeah,
Back.
sorry. Somebody was at my door. So my dog tells me I don't hear anybody knocking at my door. I guess they're bionic ears. Somebody came over. Yeah. Okay. So going back to your question.
Impact on the major indices and outlook for possible recession.
The only thing is that, like I said, there's going to be certain stocks or sectors that are going to outperform as compared to others. And so with the Russian invasion of Ukraine, we know that some of the concerns are going to rise in commodity price inflation and renewed global growth deceleration. So defense, energy are going to benefit primarily. And I think it makes sense to hold low beta stocks, which help in capital preservation. So, and some of those I think that can benefit from geopolitical tensions are LMT, which you mentioned, NOC, which as I mentioned, and I think also Nordic American Tankers and Newmont Corporation, NEM.
Oh, Nordic American Tankers.
Yeah.
So, I'm interested in that because, I've been looking at Zim, which is a shipping company. They have like a tanker fleet. And man, that sector always seems to have super low valuations with very, very low multiples, low PEs. And I don't know, I haven't really gotten your thoughts on Zim. I know we chatted about it in our community, but they had like earnings yesterday, which was a blowout. I've never seen earnings this good.
I know.
So if you like,
I did see Zim, but I don't know why it didn't break. Remember I was telling you I was looking for that break of $77.
yeah, what did we
Zim,
close at? Like 76.70, I
pretty
think.
close. Yeah. So I'm still gonna watch it because it never broke 77. I was watching it today to break 77 to actually trade this from an options angle with my room, and my room was eyeing it too, but it never broke 70. We were almost there, like 76.95 was the high. So this has to be watched tomorrow.
Yeah, I mean that was a big move though, from 72 at the bottom close to 77.
Yeah.
I guess there's that. couple ways to play that, right? Like finding support or breakouts, but it looks like you're more into the breakouts when you do your options trades.
Yeah, well, I'm looking for the break of the resistance, so I'm definitely going to look for the $77 break. So tomorrow, for those of you that trade options, we're definitely going to be watching this one, ZIM Integrated Shipping. And if it breaks $77 tomorrow, it would be a day trade. And let me see what I'm looking for target-wise on ZIM. For a day trade. Now, those contracts closed at $1. Funny enough, believe it or not, they were down to like 15 cents today. So really should have looked at that from a reversal opportunity. But I wouldn't have, I don't really like, I love reversals, but I need also confirmation. So on ZIM, if it breaks that 77 tomorrow, that has room to go to around 78.50 or $79.17 tomorrow. So a nice potential, $1.50 to $2.17 move. And
They
so
got options
we'll definitely
expiring
keep a
tomorrow. So are
yeah.
you talking about like Friday, like a lotto, like
Lotto
start of month?
Friday, yeah. I'm
Lotto
in it.
Friday. All
I'll be in
right.
it. So top watch tomorrow is going to be ZIM $77 break for a potential lotto. So
Yeah.
I'll be watching that for sure.
And which which strike would you go for if it broke
In the
77?
money, because on lottos you got to go in the money.
Hmm. Mm-hmm. Interesting.
$77 calls. I mean, listen, if it's gonna go to 78, the highest I would take would be if you don't take a 77, then I would not go higher than a $78 call, because the most this can go is potentially $79.17 or 78.50. So, you're not gonna make that much money if you take a strike further, unless it goes bonkers. Like what are you going to do, an $80 strike? I mean, that's a really super lotto. You could make money maybe on that one too. I mean, those closed at 20 cents. So, people really like lottos when they're cheap. So, I mean, that's a cheap one, the $80 strike for tomorrow. And that could be something people could eye. And consider that if it breaks $77, you might want to do something that's $80 strike and super cheap at 20 cents. And to me, that's a lotto price. 20 cents is cheap, But I like to be in the money on sometimes some of these lottos, because you don't have, time on your side. They're going to expire. Are you there, Story
What?
Trading?
What?
Oh, I lost you there.
Yeah, you know what? I'm getting incoming calls. It's my my daughter is calling me nonstop. Hello? Hello?
I hear you, but yeah, I hear you. Are you talking to your daughter or are you talking to me?
I'm talking to you.
I think it's talking about. You're talking to
I
me?
am. I'm
Okay.
talking to you. I'm trying to.
All right.
No, on this iPhone,
Okay.
like I
Okay.
keep getting these interruptions. I'm trying to make it go away. It keeps coming. But
Oh,
no, you are
okay.
great.
That's
You
okay.
are great on options trading. Why don't you tell people here how they can find your service? You have a service on Discord and how all that works.
Well, you know what? I see Jenna here, Patricia here, so they're in my chat room. Hi, Jenna. Hi, Patricia. Nice to see you, ladies here. So my room is on Discord. I have two services. One where you have audio included, where you hear my commentary throughout the day, and that's priced at a different point because it includes all the scanners and the news desk. But like the trades that we make in the room, I mean, it just pays for itself. Um, and then I have another service where it's just, if someone doesn't have time to listen to the commentary during the day because they're busy and they're always on the go, or they have another job, their full-time job, then they want maybe a service where they can get some day trade ideas and some swing trades, and then that is obviously priced at a much cheaper rate. So, but my room's very engaging. I have a lot of experienced traders in my room, but we really follow the money, and we're very a very fluid team. We do lessons on Wednesday night. Today we had ex Wall Street come and talk, and so we always have like little events going on. And we do provide real time commentary on the trades. And then, I'm talking about, I'm in the trades too. So if I'm going in and out, I'm telling the room I'm out, I'm getting out of this trade. I mean, Apple today was kind of choppy at one point, and I closed the trade too soon. And had I just let it just do its thing, I probably would have, doubled my money on it. But I mean, I closed it, and the whole thing is, you know what? I just moved on to the next opportunity. So, we traded Apple today, we traded Walmart today. We really destroyed Walmart. We had a great trade on Walmart, which actually wasn't really on my watch list, but I was still keeping an eye on it, and just took it from a technical break, but also then money flow came in. So that just validated to go and take that trade. And we did a great job with some NIO puts. So, it is fast paced, it's busy, it's active. But the thing is, the commentary does help people with trading. And, we trade as a team. So it's not like, you're just, you're in there and you get ideas and you don't really know what to do. Like, everyone's so helpful. I have a lot of very helpful people. And if anyone has questions, they are able to answer you during the day. So it makes a difference, when you're not sure what to do with your trade, that there is support in the room to help. And I think that makes a difference, because sometimes the trades don't work. You have to just cut it. Like, it doesn't work. Not all trades will work. Some will fail. And if they fail, we're not going to hang on. We're just going to take a loss and go on. So nobody likes to take losses, as we know. But, you just got to stop the bleeding and move into a trade that you can hedge and recoup that money. So that happens too. So, I mean, I took a trade on CCL and it didn't work out today. But I still, took, holding on or take a loss, or DraftKings. I had DraftKings today too. That didn't work, but I held that one overnight, and we'll see how that goes tomorrow on DraftKings, because they had like some news today with I think it was Major League Baseball or something like that. So, if people want to join my room, the link's in my bio. You're welcome to come try it. And then, you'll have to see if it suits you, and if it helps you with your trading journey. Because really, my room is more also about helping people too. It's not just, okay, here's the trade, off you go. Like, it's about commenting, explaining things. We talk. You get the news desk. I try to explain things. Sometimes I give long-term ideas. I comment why I like it, and it helps people improve their trading game. And I mean, if you follow my Twitter feed, you can read the comments. I have people in my room that have commented, and they share their experience. So it's really about the user experience, and if their experience has been positive and it can help someone else improve their trading, then I invite you to come to my room, because that's why my passion's to help people. So if you want to come by, you're welcome to come by.
Sounds great. I did follow you on that Walmart trade today, which worked out for me. So awesome. Thank you
Yeah,
for
were you
that.
happy? You were happy with that?
It worked out. Yeah.
Nice,
Definitely.
nice.
So, all right, let's get back, working my way back to where I want to eventually
Okay.
head. I want to talk about Apple, but let me finish. You talked about, how this potential uncertainty in the market could help certain sectors, right? Certain sectors can go up or down. You can see this rotation, but in terms of the major indices, and now I threw gold in there too. In terms of what's your outlook, you think, for gold, SPY, and QQQ?
Well, gold is gold. I mean, gold is always great to have. It's great to hedge too. I mean, gold is great for even long term. But sometimes gold, like, I've been burned by trading gold sometimes in silver, because I remember one time last year I had silver for like 6 months out. I think I bought them like in the summer, and then I had it for January. I lost all the money on that trade because it just didn't do anything. And so you have to make sure, like, when you're in some of these commodities, you have to be in them like when the theme is right. So like right now, I'm not in any GLD at all, and I'm waiting for this break of 187.50, because I like to take trades that are going to move. I don't want to be in something and it doesn't move because I want right now I like the day trade action. I do like swings as well, but with swing trades, I know when with the ones I like that are going to take time. But with gold, it can fluctuate also because of what's happening in the world. And so, gold was on my watch today to go to GLD, but it never broke that 187.50. So that one's on watch even for tomorrow because if that one goes and breaks, I'll definitely look for maybe a lotto on GLD if it can trigger. But sometimes, I like to wait for the trades to come to me too. So I'm not just going to jump in. I want to wait for the setup to confirm that the move is coming. So, to answer your question, I like gold as a good hedge as well when it's warranted.
Okay. And how about like just from a story or fundamental perspective, with higher inflation and now interest rates going up, how do you think of that in terms of what gold may be doing in that, in that kind of paradigm? Is that you think good for gold or bad for gold? I know higher inflation seems good for gold, but I've also heard that higher interest rates could not be good for gold.
Yeah, I've heard similar things. I mean, I've been watching the dark pool on gold. And there has been some interesting flow prints coming in, and I'm kind of looking at also, I like to also watch the options flow because I like to see like where are traders going. Are traders buying gold on the options side too? I haven't really seen. I mean, obviously there is options activity. I'm not saying there's not a lot, but the ones I'm seeing on gold, um I'm seeing a lot of traders from the options angle. They're going into 190 calls. So they're really going, into, let's say, trying to be at as close to the money as possible. And, they're going into like April and May. Like I'm even seeing like May, May 2022, May 20, 2022, and June, June 17. But I'm not seeing like tons and tons of flow like we saw like weeks ago. So the flow's not as heavy. I mean, there's still flow, but I'm just saying it's not as heavy. Like nothing unusual stands out is what I'm trying to say with gold flow. So, I mean, for me it's just on watch. I don't really have it long term, not hedged with it or anything like that.
Mm-hmm.
But, silver had a big print though today. Speaking of commodities, silver had a really big print, and silver has been really great. It's also cheaper on the options angle to trade silver. The option contracts are much cheaper than GLD, and if it can break 24.20, you'll see some action on SLV. So that'll be something to watch because there was a big print this afternoon of 1.2 million shares on SLV. And you could see here that we're not at 24.20 just yet, but it's heading towards $24. And if SLV can break $24.20, you will see some movement in silver. Option wise, really not seeing anything too much for. I'm seeing like some $24 calls for next week. And then I'm seeing some $25 calls really for June and July. So nothing really for March, besides the ones I just mentioned, the ones for next week, $24. So looks like people could be buying some of those to be in the money when the $24.50 breaks.
All right, sounds good. Man, we could have a whole
I know we
hour
could talk
just
for hours.
gold and silver. I got a lot to share on that, but um,
I know you're
so
heavy in the commodities, that I know.
yeah, gold is probably at least 20% of my IRA right now, and from time to time I've been trying to trade it with options. I had a couple good options trades on gold the last few weeks. Man, going into this week, I had whatever. I had a huge. I ended up making a little money, but I could have made like 60 grand if I held one extra day. Actually, if I held a couple hours, I could have made like another 50 or
Oh,
60,000. It was huge, but yeah, it's tough with the volatility, But yeah, no, for another time. Maybe we'll talk more about gold and silver.
And silver
Um,
moves slow, by the way. It can move slow. Sometimes it moves really nice, but it can move slow. Like that's why I'm waiting for the 2450 break if I was
yeah.
to consider it.
Okay, great. I haven't had silver on my watch list, so maybe I'll do that, and
Yeah, you
we'll
can
see if
watch it.
some
Yeah.
opportunity comes with that.
Mhm.
All right, so making my way over to Apple. I know you're a big Apple fan, and last night on Wolf Financial Spaces, I presented a trade idea of shorting Apple via
Yes.
puts. I would do it via puts, and
Mhm.
you have to be careful how you do that. You
Mhm.
want to do it at the opportune times in terms of the technicals on the chart and everything else like that. But the reason I'm picking this is because I don't know if you've looked recently at a QQQ chart. If you look at a weekly chart with the weekly candles on a QQQ and pull up the 200-week moving average, that has been a very long-term bullish trend line, which got almost tested in the 2018 recession, got close to there, and also the COVID lows. It acted as support. Now, it didn't quite get there, but it held above that 200-week moving average, which is a long-term trend line. So, now with everything that's going on with the war and inflation and higher interest rates, I'm postulating that once again, we're going to have a run at that 200-week moving average at some point here in the next couple months. And again, it may not exactly touch it. But when you look at the Qs, it's held up so much better than a lot of individual stocks. It's held up better, than obviously ARK-K. There's a lot of stocks down 50, 80%, but the Qs are not down that much. And that's because of the overweight, impact of Apple, Microsoft, Google, obviously, right? Those three. So, how on earth could my thesis come true of the QQQ possibly trying to test that 200-week moving average? The only way that could possibly happen is if one of the big boys
Mhm.
really has a problem, right? So that's where I back myself into. Well, how can this happen? Apple's got to somehow miss. They got to either miss earnings or guide lower.
Mhm.
And I'm thinking that may be possible because of what you noted. People, because of the higher gas prices, we have inflation before that. Now we have food inflation that's going to be accelerating on top of that, at least temporarily, because of the war. So, don't you think? Aren't you concerned that that could impact consumer discretionary spending? That some people may hold off buying a new Apple device or not buying certain Apple accessories. Also, they're pulling out of Russia, I believe. And a lot of places in Russia, even if it's not Russia directly, but people kind of impacted by the war. Whether they're in Poland or obviously Ukraine, Russia, all those countries in Europe, is that really the first thing on their mind? Let me go get the latest Apple device. So between the geopolitical concern and inflation and all of
Mhm.
that, aren't you concerned that Apple could miss?
Well, I love these questions because, really, if you are watching charts and looking at all these technicals, you're going to say Apple's not looking that pretty, right? Because that's what technical traders do. They're going to look at the chart and they're going to look at it and say, oh, not really going to go long on this just yet. People might want to wait till it breaks 166 and then they'll go, oh, okay, I'll take a position in Apple. But the thing is this, nothing is certain these days. We have a slew of events going on. We have the inflation, like you said, the rising interest rates, the war. We have midterm elections. We have supply chain issues ongoing. And, if everyone's trying to predict all these things, it's really like a crystal ball. Like it's almost like an art. It's almost like, like what is happening? Let me try to forecast what's going on. Should you go into something or not? So the thing is that you have to sometimes block all that noise and ask yourself, when you're talking about a company like Apple, okay, this stock, we know that first of all, it's been this is the strongest, like 2022, like has been very strong for Apple in terms of releasing new products. It's going to be their strongest year. And the thing is that the fact that it's had a sell off, even it was a great short, even today it was, people shorted it and did well. There's been a sell off in the stock, like some other stocks have had, like a lot of stocks have had sell offs. But the thing is, that is the time, in my opinion, when people would want to consider Apple. Especially if you're looking for at something from a growth perspective. Apple has, the iPhone, the SE3, the new Mac Studio. They have this incredible Mr. Ultra processor, and they're going to make some big waves with their PC market and their smartphone. And one of the things that they were talking about, they had their Apple event, which kind of felt like it was a non-event, but then the stock started moving later in the afternoon. And they have a new third generation iPhone SE, which is kind of a mid-range phone with 5G. And they apparently have updated the iPad Air and the new phone, the iPhone 13 colors, apparently, and some new Mac models. But they did mention, this was really important, the M1 Ultra processor. Now, this is what's going to shake some chip makers because everything, after the event, the stock was on the rise, kind of like the market kind of absorbed everything that was like being mentioned at the event. But then you saw, obviously a bit of a sell off now. But the thing is that, Apple announced a peak performance, and given the fact that this is just the first of what's expected to be a series of special events this year, I kind of feel like the stock is priced right, like from like where it is in terms of like if somebody wanted it. The stock is down, 14% so far for the year. And the thing for Apple is that their third generation iPhone SE is going to start around $429, which is going to put it in the mid-range sweet spot for smartphones. And then if it gets an upgrade to the what they call the A15 Bionic processor, so it's the same chip that's in the iPhone 13 and 5G connectivity. So if you can get an iPhone at that price with that performance with the 5G, it has the potential to have a huge smartphone upgrade cycle happening where people are going to go, "Oh my gosh, I'm going to get an Apple. I'm finally going to get an Apple." So there's like 300 million users that have the older iPhone, but there's also 1.4 billion people, owners, that have an older mid-range entry-level Android smartphone that are also out in the market. So I think iPhone sales are still Apple's largest revenue source and the primary driver of the Apple stock. So I think this iPhone SE3 is going to be something we're going to have to watch. And, the M1 processor, which is their first custom PC chip, was apparently a groundbreaker. And now this chip is in their iPad Air. And Apple said that the move from A series mobile chips to the M1 makes the iPad 2 times faster than the best selling Windows laptop that's in that price range. And apparently, like Intel and Nvidia, you know, they're watching all this too because Apple's move to its own M1 processor, wow, that is impressive. And the new Apple chip has seriously outperformed the competition and it also consumes less power. So, the M1 Max, the M1 Pro released last year upped the ante. And then apparently they showed off this new processor called the M1 Ultra. And so, Apple's claiming, and I'm going to quote them, that this is the world's most powerful chip for a personal computer. And that's what they said. And they also said, and I'm going to quote Apple, okay, so it's not me saying this is Apple, that it's 60% faster than a Mac Pro that's equipped with a 28 core Intel Xeon processor. And they said that its integrated graphics outperform the highest end video cards, which equates to an 80% speed boost compared to AMD's Radeon Pro WX 900 GPU. And so that their M1 delivers this power while using 100 watts less power than a high-end PC processor and end up to 200 watts less power than a graphics card. So I think that, you know, this is a stock to consider when it's down, because I don't believe that Apple's not going to sell enough stuff. I think Apple's going to be constantly profitable. So I think the bottom line with Apple in particular is, it's going to have its days where it's going to sell off. So, okay, so then that day, people that like to short, people that buy puts, they'll be buying puts. But as an investor, you like opportunities like this when the stock's down, 14, what did I say, 14% year to date. So, this could be opportunity for investors to take a closer look. So I don't think there's a concern with Apple at all. Not from, and investors that do the due diligence, that, check everything. They have, like, Apple has, like, everything correct on the balance sheet. There's nothing wrong with the company. So all this noise going on in the world, of course it's going to affect the stock. Of course there's going to be sell-offs in the market. But some people look at it as, man, this is opportunity. Like, not everyone looks at it that, oh, I'm so scared, I don't want to buy Apple. Not everyone thinks like that. Some people are like, you know what? This is a really good opportunity. Apple has so much going on. So many things are going to be happening for Apple in 2022 that this is, for some investors, a potential groundbreaking entry to, like, wow, let me get this at a bargain, or let me take a little nibble, some shares as a starter, and then they could build on that. Whether they add on the way up, which is what most investors like to do, then that's what they do. But they could, just keep a watch on it or add it on the watch list, and then they will add it when they feel comfortable. But I don't think that anyone should be scared to invest in Apple.
All right. Well, as always, a very well-informed opinion on coming from you, Vegas, armed with lots of facts. There's a question or comment from Lewis. Do you have time for that? Then we'll
Yeah,
call
of
it a day.
course. I hope
All
I can
right.
answer him.
All
Lewis,
right.
I hope I can answer you. If I can't, I'll tell you that I can't.
All right. Go ahead, Lewis.
Hey, how y'all doing? Thank you, Vegas. I really appreciate everything all the insight you've shared.
You're welcome.
One thing I wanted to ask is, you just said you are of the position that no one should be fearful of investing in Apple in the long term. One thing that I'm wondering that I haven't heard anything about, and I'm off in spaces way too often, is this idea of whether we kind of have like this bifurcation of like the Western and the Eastern world, possibly happening in a way that it's going to get even worse and more distinguishable. This idea of like Russia and China joining forces, you have like the world of the monarchies versus the world of like the Western democracies. And if sanctions start to move in the way of China and they start to move towards Russia, and then that might influence or have some kind of an impact on China's supply chains. And just in a very amorphous idea of, as we witness China and Russia getting closer, and we haven't really done anything in terms of sanctioning China and disrupting supply chains in that kind of a capacity, already more than they already are. Do you have you thought about that? Do you think that's a concern that's worth any merit at all, or
For Apple?
for Apple, and just whether, essentially.
The thing, so remember, one of the things that would, if people look to invest in a stock, one of the things people look at is, what does the balance sheet look like, and a company like Apple, there's so much, their cash flow, their free cash flow is so powerful. And, in the last few months, we know that the stock has pulled back. But we also know that their cash flow is super strong. And, the stock did have a peak around 182.01 back in January. And it may not seem like, it's much cheaper than that right now. But the thing is that, the company's free cash flow is just absolutely something to not overlook and should not intimidate any investors. And, if the concern is that, oh, it could go lower because of all these, let's say, geopolitical things going on in the world, then you just wait. You'll know when. You have to be comfortable, first of all, to want to take an investment position or to even take a trade. And the thing is that Apple has generated $44.163 billion in cash flow, and that is just incredible. And their financial statements, their quarterly cash flow statement, it's just so powerful. And so to me that, I think in the next year, I think that we'll see a much more fair value of the Apple stock. Obviously analysts are going to have their own rating on this, but the actual stock has a lot of growth. You have to always keep in mind the free cash flow is really key, and also the fact that it generates money from this revenue is massive. And apparently from everything I've read as well from the stock from the company, they're probably going to have about 36% of revenue, some growth in 2023. So it looks like their cash flow is going to go to $150 billion by next year, 2023. So always, like to answer your question, really what to do, what do you do with the stock? I think it's um, just keep it on watch, or wait for the right opportunity that is good for you. Like for me, it doesn't it doesn't bother me to consider an investment in Apple, but it's one of those stocks that it's just gonna keep going. I mean, it's gonna have its days where yes, it's going to have it's gonna pull back, but the thing is, free cash flow is powerful. And what is important to know with free cash flow, as I'm sure you probably do know, is that it does raise the valuation of the stock. And so despite um, everything going on, free cash flow is still king. And so right now, the pullback has nothing to do with Apple's performance as a company. It just has to do with some of these things going on in out, across the world. And so that stock's getting impacted. And can it get impacted if something was to happen? Let's say with anything going on in China. Well, of course it can. But again, Apple has, I'm sure, look what happened when there was the COVID, when they had some issues with closing a lot of stores in China. They did a lot of stuff online. They would do online stuff. So they do have, obviously remedies to workarounds. I think COVID's put a lot of companies through a big test of how to still run your business when you have to shut down physical stores. So I think Apple has obviously, I guess, contingency plans of how to handle these kinds of situations. And I don't think that it should affect their ability to constantly grow and generate revenue. And I don't think it's going to stop a consumer from purchasing online. And I think a lot of people, I mean, I've seen an Apple store. It's always busy no matter when I go or walked by. But I mean, I don't really go into the store. If I needed something on Apple, I just order online. It's just more convenient. The customer service is out of this world. I've never had to call them, but I did not too long ago, and the guy spent 2 hours with me, helping me with my iPod. I had a problem, and I'm like, "Do you have to hang up? You've been talking to me for like an hour and a half." He was like, "No, I will hang up when I'm done helping you." So their service is outstanding. So the people are loyal. If you are an Apple lover, you're loyal to the brand. They don't need to sell anything. People are just like, they're just like Lululemon. You try the Lululemon pants, you're like, wow, I love how it feels. You're never going to buy anything else. Same thing with Apple. Like people are like, they swear by the product. They love it. It's like they're like married to it. They're in love with it. They're not going to give it up. So, things can happen and the stock can go down. Yes, but always view it, in my opinion, as opportunity for yourself, and not be concerned that, oh my gosh, I'm investing in a really crappy company, and if I put my money in, it's never gonna come back. I don't believe that's true. I think the stock can go significantly higher, especially the fact that they have significant free cash flow, and that is basically the bottom line with Apple, is that sound um, cash, and cash is king.
I want to add, while Vegas, perhaps you'll end up being right. I think that was a very good question, Lewis, you're asking.
Mm-hmm.
The last two Sunday nights in our story trading community, every Sunday night we have a Zoom presentation, and we've been focusing on the long-term impacts of what's going on with Russia. And there's several sectors that we think can be bullish for quite a while, not just as trades, but just as quarters, maybe even years. One of them obviously is energy independence. Other one is agriculture. Agriculture plays. defense. We talked about missile defense earlier, but then one of them was this "Made in the USA" theme. It was very interesting. At the State of the Union address, Biden, at the very beginning of his speech, the first 5 minutes, it sounded like you were listening to Trump. He was talking about securing our borders and focus on "Made in the USA." Which Trump had been talking about for years, and all of a sudden now you have Biden talking about "Made in the USA." And the reason he brought that up was because of this geopolitical risk of doing business with Russia. And I think that, companies like Apple and even governments like the United States have to be forward thinking, and start thinking about maybe we shouldn't be so reliant on China. Right now, I think we have major problems, if what happens with Russia happens with China, forget about it. All bets are off. Like, everything's going down, right? I think a more likely scenario is that over the next several years, there may be an effort, maybe even through legislation, of trying to compel companies to do more of their manufacturing in the USA, which in the case of Apple, perhaps their costs go up, perhaps their margins get decreased. But, there's always a possibility of what you're talking about. I mean, it's going to be a scary world if that happens. And if China and Russia meet up, then all of a sudden, I think the gist of your question was, well, is Apple going to have a much smaller TAM all of a sudden? Like, they get hit by two ends, the supply chain, but also maybe they can't sell their products in China. They're no longer selling them in Russia. So I think it's a valid question, but would impact every major company in the stock market in a pretty massive way, not just Apple. But at the same time, it could end up being a huge opportunity for the U.S. economy, and we could end up seeing massive amounts of investment building manufacturing infrastructure in the United States and perhaps Mexico and North America. So yeah, Vegas makes a good point that they have all this strong cash flow to withstand anything, and really at the end of the day still come out on top. So she makes a great point, but I also think that was a very valid line of questioning, Lewis.
Yeah, that was a great question from Lewis too. I think it's a valid question and something to keep in mind for sure. But again, are these problems going to last that long? And hopefully not. And hopefully there'll be some resolution. But maybe not anytime soon. But I mean, I can't see something like this going on for years.
And maybe we'll be building the iPhone in your home country. You're in Canada, right, Vegas?
Yeah, I am. Yeah.
There you go. Maybe we'll start building the iPhone in Canada.
Yeah, products made in Canada are actually good quality, so they should ship it. Or they can even go to Mexico. The good products made in Mexico.
Yeah. And you can always find the people and the products, even these minerals, important minerals coming out of Russia, neon and palladium. People are saying that could impact semiconductor manufacturing. There's always a solution. You can always get that stuff somewhere else. It's not like only Russia has it or only China has it. It's just a matter of cost. So, you could see costs go up if you have to rely on, let's say, just North America instead of the other half of the world.
Absolutely.
All right, Vegas, thank you so much for your time. I know we went over time. We'll get this recording up. The last one from last Thursday is already up on Spotify and on YouTube. I think just go to storytrading.com Spotify or spotify.com storytrading, one or the other. I think they might both work. And you can hear the event from last week with Vegas. Always great content. And how do people get to your Discord again? Is there a website or just through your profile on Twitter?
Oh, yeah, you can just go on my, if you follow me on Twitter at ILuvStocks1, so the @ and ILuvStocks1. And my link is there if you want to check it out. You're welcome to come by in my room. And if you need any help, just message me. My DMs are open also on Twitter, so you can always message me through Twitter. And happy to help in any way that I can.
Awesome. Sounds great. Thank you so much.
Thank you, everyone.
We'll be watching Zim with you tomorrow morning.
Yeah, let's watch that $77 break, see if it goes. Definitely. Thank you, everyone, for coming by. Have a wonderful evening, everyone. Take care.
You too. Bye-bye.